Traders, what's going on, guys? Cleveland Bishop here, and it's time finally for another Monday market breakdown. It's been a solid 2.5, 3 weeks, and I haven't been lollygagging around. Okay, I've been working on this breakdown here and a couple other things, but this isn't your average breakdown. Okay, this is the second half of the year. We're coming up into the second half of 2017. It seems like already, right? And folks, this first half has been a very tumultuous 6 months. Okay, we have hit record volatility in FX. Something that I predicted way back in January, all right? And folks, it's not slowing down anytime soon, and this is very interesting, this is a very interesting phenomenon because, folks, these are currencies, these are economies that we're playing with here, and the way the world is set up at the moment is everything's is globalized, okay? When it comes to banking infrastructure, when it comes to economies, when one economy does shakes, you feel it in the other one. And so for us to see this record volatility, something could be coming, but, who knows what that could be. We definitely have a lot of things on the table geopolitically and even monetary policy-wise. So we have a lot to talk about, and that's what we're going to do. We're going to review the past 6 months, and we're going to look forward and check out the next 6 months and kind of see where we are in terms of maybe fundamental announcements, see where we are with structure, and see if we can get, a directional bias and catch some of the upside or downside potential on some of these pairs, okay? But before we do that, there's a little snippet that I want you to check out that happened this year, actually early this year, January, and it was a really big prediction, and I think it played out pretty good. I want you guys to check that out. Nothing too horrible happens for the euro. If no nationalists get elected, and there's really just boring old Brexit parliamentary BS happening, and Donald Trump does nothing he proclaimed to do, and we don't heighten rates, guys, you're going to see all 8% of that U.S. downside move that's happened in the past quarter retrace. All right, you guys got to show me some love on that one, right? That was pretty good. In terms of this space of Forex traders putting out content, I haven't seen anybody perform that well when it comes to a fundamental forecast and being able to gauge I guess the sentiment and, the non-directionalist players that executed in that down move, okay? Because, folks, that entire move, again, those guys were truly investing, okay? They were hoping for future value, all right, in terms of Trump being able to execute on what he was doing. They wanted to get in early, all right? And at the end of the day, he didn't execute. And so slowly but surely, you saw a lot of liquidation come out of that market, and now we're back to where we were, $1.12s. And that's exactly where we were before the election. We're at a 23% retracement on the Fibonacci, an impenetrable level that we've been in for the past 2.5 years. I'll show you on the charts when we push on over. So what does this mean? We have equities at all-time highs. Today we had a little bit of a spill in the text. Everyone's kind of buzzing about that. We have all this rush into gold. Gold potentially about to hit the 13s. We have a lot going on. Okay, we have a lot going on. So what we're going to do is, because I hit off on some pretty rock star analysis, I do have a special guest in this breakdown that I recorded a couple of days ago. And, he wants to share his thoughts. He's been managing money for quite a long time. And so, guys, I present Rob Loud, and after that, we'll go a little bit over into the fundamentalists. So enjoy me and Rob's little discussion on the Trump trade in the global space, in the currency space. All right, check it out.
All right, Rob, what's up, man?
Oh, just hanging, my friend. What's up?
Nothing much. So, guys, this is Rob Loud. He's the head of the firm here. My mentor, too. My friend. We're cool, right? We're friends?
Most days.
All right. So I guess you want to give him a little bit of background about who you are, what you do?
I'm nobody, so just know that.
All right.
I've been in the equities world for about 15 years. Before that, I was in private operations, private business. I've worked for Fortune 500 companies in management marketing. Done several of my own companies, mostly tech related, but I've been in the equities for about 15, 17 years. For the most part, we invest in companies, smaller, mid-cap, and large, but we try to find undervalued companies and bring value add to them. Whether it be just relationships my partner and I have, whether it be resources, any number of things. I don't want to be a silent investor, but I don't also want to be an activist. I want to be a value add, because if I'm going to invest money, I'm doing it because there's something I believe in, whether it be the management, whether it be the company, the product. In this case, I believe in Cleveland, and so we try to find different situations where we can add value. But at the end of the day, it's not about just making the money. We try to do these things because we're trying to further and better what we do, not just ourselves, but We work with guys that we see potential in and help them be better than we are, make more than we do. And if I do that, life's pretty good.
Sweet. Yeah, so they're all equity side, and what we're going to do is we're going to try to relate. Okay, I'm not going to try to get them too tied up into the currencies here. That's me. I'm usually over here on the macro side of things. And we're basically going to kind of talk a little bit about this euro swing that we've, that I just kind of preluded to earlier on. We've had a full 100% retracement from the $1.12 down to the 0.3s. Now, Rob is a contrarian, and he's going to probably attack everything I say, just kind of question it a bit. But, your idea, man, I forecasted that we could see a 100% retracement. I don't know if you've seen the video. I'm going to show it to you after this. And we did. We just saw it. It just planned out. Why is this the case? We still have equities at all-time highs. Yep. But we've just had this currency move happen as if, everything that was inclined in terms of him executing on a global scale the market is basically saying that he didn't execute. Do you think there's maybe some other things in there? We did have a Macron victory that was kind of priced in that did jump us up around 2 points. But other than that, it's just very interesting to see that we've retraced fully back up in the structure. How do you think his presidency is executed on the global markets in terms of bonds and all that kind of stuff? Do you think those other countries maybe don't have as much faith as they did in holding U.S. assets?
I think U.S. assets are probably still valued as some of the best in the country. If you look at Chinese investors, for instance, they come here, they put a lot of money in our markets, they put money into real estate. You look at South Americans, they don't trust their banks, frankly.
All right.
Let's talk about Venezuela.
All right.
The banks there don't have a ton of money because what happens is a lot of those expats or folks from down there, they'll come up into Miami, South Florida, different areas. They buy a ton of real estate. They view that as safer than putting it into the banking system. So there's many pieces at play here, and it's not just a presidency. It's not just a person. Now, has Trump lived up to the hype? The equities market, I'd say yes, but that's a different spot. Equities are probably more a reflection of Americans and people's general business view of our president and Trump.
Okay.
I think currency reflects more geopolitical than equities typically do.
You're a smart
man.
So,
if you take those two, the reasons I look at the equities and go, hey, market's great, is different than what you would.
Okay.
And I'm good with that. Now, I'm not going to get on a political thing. I won't say I don't care who's president, but at the end of the day, we're here about business. And regardless who was president, is president, who will be president, all of us, myself, Cleveland, all of you, we've got to look at business in the markets and make strategic decisions based upon the information that's available to move forward, to make ourselves money.
All right.
And so we have to be aware of all these factors, but at the end of the day, it doesn't matter if I'm a Democrat, I'm a Republican, I'm independent, or what I am. If I'm white, I'm black, I'm yellow. None of that really matters. It's about education. It's about the information and putting it together. And that's why I like Cleveland. He's looking at information and saying, here, how do I make the wisest decision based upon what I'm going to trade? So anyways, making the trade based on the knowledge, because he's used everything that he has, both geopolitical information, news sites, as well as the technical analysis and charts and all the other functionality. But when you put all of it together, he's teaching others, but also executing himself, how to make a trade based on wise information as opposed to it just being an emotional trade going, ooh, I think, and being a gambler like going to Vegas and hitting the slots.
Yeah.
There's reason to why he does what he does, and it makes for a good trader.
Yeah, because some people may have gotten caught up in the Trump trade over here in the geopolitical space, but there's so many more implications that made this thing pull back a bit. And one thing you were just saying was, you were mentioning how, this gap could fill, and in regular markets, as a technician, you would expect that gap to fill, but as you see, we just pushed out and broke the level there, which is very interesting. But again, as I just said to you, how would a technician take this situation here?
But that's a great example on this one right here. What you would have expected is at some point, right around in June to July, for the thing to take a swing back up and fill up again.
Exactly.
However, with that slide there, you have to take into consideration, specifically with the euro, that's when the downfall of Greece and their debt crisis, Germany, all those things were falling apart, and the world as a whole was going, what's going to happen? Is Greece going to have a complete and utter financial failure? And if that happens, what happens to the euro economy?
Right.
While it's one country, the European economy is different than ours.
Yeah.
Because of one country's, whatever's going on there, the debt, whatever it may be, affects it in a much greater way than saying, oh, Florida has this going on in Georgia, but California, the United States doesn't function the same as the European economy with the euro. So,
Yeah.
that period of time, it was something to take into consider. But, that's a great example of if you have all the information, or at least you're looking at the geopolitical, the news and all that, as well as the technical analysis,
Right.
you might see a continued slide and say,
Right.
it's time to get out, I'm done, let's let this thing be done before I trade it actively.
Right. An example is Puerto Rico. They just went through bankruptcy, which is very interesting. They defaulted on some of their municipal bonds, but obviously we don't feel that. But as Puerto Rico's not I guess so much of a country as they are more of a territory. But here again, tying everything into the euro. Folks, if the euro, if Greece, if Cyprus, if any one of those single countries end up putting themselves in a situation where they need a bailout, then you'll definitely see the entire euro economy as a whole capitulate. And so that's what everyone was thinking what was going to happen, on the precipice that Marine Le Pen was elected. And what's interesting is, again, it wasn't maybe so that she was going to win the election. It was just more or less, people weren't very inclined to want to invest in euro assets based on the idea that she could win the election. And it wasn't until that poll came out where it was 80% likely Macron was going to win that, we actually had that jump. So as of right now, we're in the middle of the year. It's a very interesting point. Trump trade still in full effect. You did have some fundamentals pull back, but the Dodd-Frank news made it so that pound, so I was looking at Goldman Sachs, Wells Fargo, Bank of America. A lot of them are actually pulling back higher after that one correction. So you maybe have some confidence coming back in. Where do you think these markets can go? I mean, is this not over? I know you've been playing equity side. You've been killing it. I pulled the Aussie trade, and I remember when you told me that Aussie's going to pull over a bit. It actually had one more update. And so it pushed another 60 points, and I scored. That's when
I'm not always right.
Right. But again, on your equity side, you've been killing it. What do you think? Where do you think these markets can go right now?
I think the equity market's going to hold. I think we're going to, over the course of this year, I think we've got a couple more months of an up market.
Wow.
Then I think we're going to see a little bit of a bear pullback for the last fourth quarter, unless, and there is a big one here, if Dodd-Frank gets either repealed or reformed in a substantial manner, I think you're going to see the equity markets explode because it allows the companies to fundamentally change, and not because they're not doing what they're supposed to, which is what a lot of people think. When you look at how many hundreds of billions of dollars Dodd-Frank has cost the public market just in compliance, I'm not talking about forget the political aspect and all that, just the sheer amount of money that these companies have to spend that they can put elsewhere, I think that could have a very significant change. So that's one of the big fundamentals that I'm watching to see what happens.
An example was Greg was saying, Greg's one of the other guys here in the firm, he was mentioning how Goldman Sachs, over 250 proprietary traders speculating on the market, working at Goldman Sachs, post Dodd-Frank, you can't find more than 20 working at the company right now because, again, those commercial institutions, Dodd-Frank states, commercial institutions cannot speculate. Commercial banks can't speculate on the market anymore. You have to be an investment bank. So all the commercial banks ended up hemorrhaging capital because the speculatory segments of their firm couldn't make any more money. So that is one of the things that wants to come back. You want Goldman Sachs trading against you as a speculator?
You know what? Truthfully, I do. And he's going to laugh at me. How do you make money in equities? Buying and selling.
Right.
If you have nobody buying and selling, you can't make money.
Okay.
And, I like volatility. It's my personality in the market. A lot of people don't. And that's why I tell you, depending on your personality and what your long-term growth goals are, invest in the proper things.
Right.
But if the market's volatile, up, down, it's great. You've just got to start watching those patterns, seeing what's affecting the market, whether it be the news, geopolitical, technical analysis.
Right.
Same thing with what Cleveland's doing with the Forex and currencies. If you stay aware and give yourself the ability by education to make wise decisions of what's going on, you can rock the market. And don't get me wrong, we all have bad days, we all lose. But when you're losing because you just made the wrong call and it wasn't an emotional thing, it's easier to live with because the next day you can learn from what you made the mistake. But when you start trading emotionally, you're screwed.
Right.
So, that's why I think having all those guys back, the market becomes more liquid. And as much as we all want to rag on the big banks, let's be honest, when the market's rocking, the economy as a whole will work.
Yeah.
It works better because it's just the way it works, and I can't tell you why. I'm not perfect. I don't know. But when banks are rocking and rolling, things seem to work better in the economy.
No, I mean, a lot of capital gets loosened up, man. And I know we were talking, you were saying it's the Wild West 5-6 years ago. That could definitely come back if Dodd-Frank ends up getting repealed. So.
And just for the record, I'm not a fan of the Dodd-Frank regulation, as you and I've talked about.
Right.
Do I think there needs to be proper regulation? Yes.
Okay.
But not knee-jerk regulation.
Right.
And that's what, unfortunately, our government tends to do with regulation when it comes to the market space, is something happens and they just go from one end to the other. So could they go to the other end and let it be a wild, wild west, which is just as bad?
Yeah.
Yes, it could.
Yeah, man.
So there's a medium which we have not found yet.
Right.
And that's what I'm hoping, whether it be this administration or another one we get towards, there's a right amount that justifies the existence of all these rules, I guess. But what we've done right now is taken away personal responsibility from a lot of investors, saying,
Right.
"Oh, I made a bad decision. It's my broker's fault because they let me buy it."
Yeah.
You know, I'm not a big fan of that. Take some personal responsibility and do what Cleveland does. Educate yourself. Be able to make a wise decision in your trading,
Yeah.
and that will work. And then the regulation becomes a little bit less irrelevant because
Right.
if you're making wise and educated choices,
Right.
it's on you.
That's very true. That's so back, I don't know how long ago, but the CFTC and NFA cracked down on retail traders. 100 to 1 leverage used to be the standard. They cracked it down to 50 to 1 leverage because so many retail guys were blowing their portfolios. So, you can execute the same way with 100 to 1 leverage and you can 50 to 1, but at the end of the day, when you give power to the people, sometimes they use that power in horrible ways and end up blowing themselves up.
No
It's
doubt.
interesting.
But whose fault is that?
Yeah, it's theirs.
And
it's absolutely theirs.
And that's where my question in lies.
Right.
That you and I discuss at length a lot.
Right.
Do we want the government or in regulation to control my trading,
Yeah.
or am I willing to say I made a big mistake?
Right.
And that's what a lot of folks unfortunately can't do.
They can't do that.
So
And that ties us all up and makes us all have to, trade within this fine line, which limits profit potential.
well,
You
exactly.
kind of want those irrational players in there because those are the guys you're making money from.
Well, exactly. and it's like I said, it's when the market's volatile, there's more money to be made.
Right.
If the market's just flat, there's no money to really be made.
Absolutely.
And
Absolutely.
once again, I'm going to say, when you're able to educate yourself
Yeah.
into this stuff, that is the biggest thing I can tell anybody that's trading equities, currencies, commodities, option, any of these things. Educate yourself and make decisions based upon a real reason.
Yes.
As opposed to, you know what, my knee's kind of acting funky today, so that's
Right.
always a sign.
Right.
Or everybody's buying it, or Joe from Target told me to buy something.
Right. Or having no relative idea as to what's happening in the underlying of these assets. I call it maxing out at technical analysis. These guys are just playing chart patterns and have no real idea what people are actually doing in terms of buying and selling, what fundamentals may come out. They're relying solely on patterns and technical analysis and thinking that that's going to lead them to consistent profitability. Because you can be profitable one day, right? Profitability is it's not really a journey. It's making the right decision over in a methodical way over the span of hundreds and hundreds of days. Would you agree with that?
I would.
Right? So at the end of the day, if you make a rash decision one day, then immediately you give yourself the opportunity to make another irrational decision, and that just adds up to this style equity curve, and then boom, how are you going to supplement income and do things in the capacity at which Rob does it and some of the other guys here do at the firm, and I guess I do as well. So Rob, thank you so much, man.
Anytime, brother.
Boom.
All right, guys. Well, that was the man Rob, and again, he's all the way over in the equities, okay, and specifically alternative equities. All right, and when you're in your space, I did the best I can to present this to him in a format that an equity trader can understand. Be in his shoes and put yourself in a situation where you have to now be in a completely different market segment. The geopolitical space, the monetary policy space, all those types of things. You don't have to really worry about those when you're dealing with, blue chips and under, okay, and you're trying to do conversions of financing and all these types of things. His business is completely predicated upon the execution of products, the execution, as he mentioned, the execution of the higher up management and all that. So he doesn't have to focus so much on this global skill that we do. So, he did an excellent job. Definitely applaud him for coming on, and we'll definitely be seeing a lot more of him and a lot of other guys, in the network and here at the firm that are executing pretty well in their capacities of, other capital markets. All right. So again, let's think about this, right? As of right now, we've had a lot of risk come off the table. One of the things that was holding up this Euro market, which is what I forecasted, all right, which is what I forecasted back in January, was the elections. Okay, Germany, that's done. France is done, and Netherlands, I don't know if they've had an election, but it didn't make any news. So at the end of the day, at this point, we're really just kind of focusing on some of the other things that have, were being held back by, is the European Union going to split apart, which is a fear that cascaded around the entire space in terms of anybody managing money or anybody in the capital markets, starting around Q4 2016. All right, so now, the head of the show, I guess you could say, is Donald Trump. All right, and I guess he was even back then, but he has everyone's attention. Back then in January, I was a little split between how aggressive this European Union shakeup was going to be versus how aggressive Donald Trump was going to be. But now at the moment, it seems as if the most pertinent news that we have day to day is what's going on with the Russia scandal. All right, obviously they were involved in something. You have people already getting fired. You have people recusing themselves. I mean, for people to still be asking the question if he was involved in anything Russia related are literally, they're buffoons, okay? There's a certain saying, and when you need 100% of the facts, oftentimes you'll never get there. Sometimes you have to make conclusions, and I have concluded that, of course, Trump was meddling, okay? And it just depends on if the law is going to crack down and execute on any kind of penalties of him or anybody in his campaign. But I've moved on from that. At this point, we really just have to kind of look at what's going to come out of it, all right? And how this is shaking up the markets. We've seen a huge run-up. I'll show you over in the Euro USD. We've seen a huge run-up once those conclusions and once those trials started to happen. We saw an escape out of the U.S. market into some of the other assets, maybe globally or maybe commodity-based. And at the moment, it's really just about, okay, what's to come? What can we be looking at right now? And I think currently on the table, more than anything, are potentially interest rates outside of what's happening with Trump, okay? And then outside of that as well, maybe some things have died down with the whole North Korea deal, but if not, that always can come to the fray, right? I mean, 6 months is a very long time. Anything can happen. So there's a couple little things underlying that could maybe jolt us around a bit, but when it comes to a buy-side move, as easy as it was to predict from that 03 level back to the 12s, right now it's a little bit harder. It was easy to say, okay, wow, these are overextended markets. Trump may not get anything done. You could easily forecast an escape of that capital if you understand market participants and how they are interacting with the market and their threshold in terms of risk tolerance. Okay, that's a very important gauge as well. If you can gauge that, you can gauge the response that they'll have to certain data that actually hits the marketplace, right? So at the moment right now, it just seems as if, all right, Trump has to execute on something. There's no tax plan. Healthcare sucks. There's so many things that are still up in the air. We might see a continuation. We might see a continuation of this USD weakness purely just based off of the fact that there is not much getting done. And when it does get done, it's lackadaisical, right? It's kind of bad. It's not very, our economy and the American people, they're not receiving it very well. So we'll have to see how that turns over. We're going to take it week by week, right? It's kind of hard to put out a huge lofty forecast. Back then it was easy. Nowadays it's like, hey, we're kind of going with the same precipice. We're here. We're in the $12s, low 13s. Continuation of the move as U.S. strength happens. And when it comes to Europe, there's a couple of indications that I'm looking for. I really want to see exactly how this, the trade flow, is going to react off of certain things that Trump is doing when it comes to Merkel, when it comes to Macron, when it comes to, the president over in Australia. Okay, these are going to have implications. There's business that is done globally. That's just the standard now. You just can't go back to this, solemn American economy that has no import or exports outside of America. I'm sorry, there's just not much sustainability in that. And then all the debt and all the other obligations that we have overseas, at the end of the day, I would understand this American first ideal, but you still want to go to war and you still want to be involved in all these different oil-based economies and how they're reacting around each other, and if they're democratic and putting them on a stage of excellence in terms of them building themselves up. I mean, it's bullshit, right? It's bullshit. We're over there for reasons. If we want to be the savior of the democratic ideal, then why aren't we in Africa, right? Why are we in certain parts of communist Asia? It just doesn't make any sense. There's a value proposition there, and it's not peace in the Middle East, all right? It's oil, all right? So at the end of the day, we're going to go into the charts. And while we're going into the charts, I'm going to look at some of the fundamental implications that could jar us around a bit Euro, I think, has straight just bull upside move. And you guys gotta understand, if we crack this 23.6, I'll show you in the charts. If we crack this 23.6, this monthly, yearly 23.6 retracement, folks, we could easily run up into the 20s here on this Euro USD. All right. So again, I'm not just throwing that out there because I want to throw out another lofty idea, but it's just the facts. Unless we get the U.S. strength, then we may not see any kind of run. We may not see any kind of run back to the sell side. But if Trump gets himself together, if Trump figures out a plan, if we just really start strengthening things in terms of potentially monetary policy as well, then yeah, we could get a pullback and rest around a bit. Are we ready to run to the 20s right now? No, we're sitting at some highs, $1.12. We ran there pretty quick. We gapped. And at the end of the day, I think it's imperative to understand, market timing and, an overbalancing of, buy side, which is what I think is happening right now. So we could get a slight pullback. But again, things can happen pretty quick. All right, we saw the euro push 400 pips last week, 2 weeks ago, from the 0850s to the 1250s. Okay, so things can happen quick. You want to be on your toes, and you want to just really be there in terms of where these price action, indications are heading in terms of the fundamental idea mixed with that technical bias as well. So, guys, what we're gonna do? Let's head over into the charts. Let's see what the past 6 months have looked like for this for our pairs. Let's see what we got for the next 6 months. Let's go out to the monthly, let's go out to the weekly, and see what's possible based on certain things that may happen on the economic spectrum. Okay, so let's pull over into the charts. All right, traders, let's check out this euro, Aussie, and pound. Got a couple other pairs we want to look at as well. These pound crosses have been ripping as of late based off of Theresa May and her whole deal in terms of this jolt election. But let's start off first with this euro USD. What I'm going to do is we'll pull up on that monthly first, and I want to show you that 23% retracement level that I was talking to you guys about. And if you understand a 23% retracement, then at the end of the day, this is a very fast market. Yeah, we've held it for 2 years, 2.5 years now. But at the end of the day, the fact that this market had a hard time penetrating back up into these highs was because there were some serious fundamental implications that didn't allow for this $13 level to sustain. Okay, and we understand that this was a whole Greece deal. A lot of that recovery has yet to really been shown. We're still doing some stimulus packages over there in the EU in terms of $60 billion in bond purchases every single month, right? So again, at the end of the day, we've really had a hard time getting some rebalancing of some euro strength, but that's coming to an end because you just had Draghi talk about how he could potentially be ending the stimulus package. And again, folks, that's going to be another catalyst to us potentially breaking this downside correction here and actually popping back up in to these structural levels. And I mentioned the $1.20 because notice right where structure actually takes place, we could easily come right back up into this 50% retracement level here. Okay, so pinging around the 50.38.2. All right, it's very feasible, especially if we get zero execution on Trump's behalf in this U.S. U.S. economy's behalf. Okay, so what I'm going to do is I'm going to start off right before the election. You guys know I've been berating you about the fundamentalists that got in on that trade. Yeah, they were looking at the fundamentals, and yeah, they were trying to price the market in. But at the end of the day, they were directionless. Okay, there's a difference between speculatory buyers, and there's a difference between people that are true blue. They believe in the value. They'll hold the trade out. They'll allow for a little bit of some downside risk. But at the end of the day, there were people liquidating out of this U.S. dollar very, very quickly. All right, and I can show you that to be true. So immediately we come over 2016. Let's head over into November. And so we ended up getting a huge run in this market. This is November 7th here, November 8th, the election. And then boom, we immediately popped down to the low of consolidation, right? So amazingly, this market immediately said, okay, if Trump is getting elected, let's run to the lowest level that this market has been in ever, right? In a past decade or so. All right, let's start pricing in this move right now, because if this market was willing to play around in this consolidation with no guy like Trump in office, we definitely need to be start to play down here in these $5s. All right, and then so you get an interest rate hike, breaks us out of the low. Okay, and then after that, we really start just consolidating around structure. Okay, so we're in January, we're in February, and again, this is a weekly. And notice, week by week, we're kind of, we're having instances where the market wants to kind of surge, come back into structure, come back to the low, but then we get a relief rally right back out. And on little things, it only took little instances and little jawboning to really have this market run. But at the end of the day, what happened was the market got really used to the jawboning that was happening, and we just start pushing back higher. So now you start to see a top formed right here, right? And then in this instance, way back when, I mentioned to you guys saying, hey, look, we could easily pop this $8 level. We could easily pop this level, and it adds up to be, if I draw it up on the fibs here, it adds up to be also a pretty nice pinpoint level in terms of our Fibonacci's. Okay, so pinging off right here at the 38.2, you'll notice that it's also some very powerful structures back in the 2015, 2016 time periods. And then all we needed was a couple of fundamental implications, a couple of shitty news coming from the U.S. President and the White House in general, and we exploded out of that level. And you know why we exploded out of that level at first was because of Flynn. So Flynn made us pop out immediately. And not only Flynn, we also had Draghi mentioning that he would slow down rates. And then we also had an interest rate hike. And surprisingly, folks, you got to be amazed by this. We had a 200% push to the upside when we heightened rates in March. All right. So again, you're having some very strange price action happening. We float back down and then immediately we start surging back up. And now we're here at the highs where we've established, that resistance level where we could potentially start seeing the market start to turn around a bit. Okay, so an immediate run out of this structural level here to this low. Once we saw that Marie Le Pen was not going to win the election, okay, 80% chance 2 weeks before the election happened, 80% chance that Macron was going to win. All right. Outside of that, you had President Trump under 2 FBI investigations, all the different things that again potentially fundamentally has given this market implications to push to the upside, got priced in. And immediately we ran to the $13s flats. We're sitting around the mid 12s right now. We're in the low 12s, 11 highs. All right. So as of right now, it's a very expansive market. It's a very explosive market. Do you want to start buying up here at these highs right at the most impenetrable level we've been at in the past 5-6 years? I'd be a little bit careful to do so. Let's see if we get a pullback. And obviously, if we get a break at a high, we can just execute on a breakout. But let's see if we get a little bit of a pullback back down into structure here, maybe to the the low 11s, high 10s. And then at that point, we can maybe start executing on some buys. But I don't want to be buying up here at these highs. I think we're at a really good selling point. Especially if you push over into the daily, you can see that we've really just been kind of consolidating up here at these highs. Markets are really slowed down a bit. Had one more push out, and usually when you get those kind of instances, if we can just get a break of this low here at 1160, I don't care if it just breaks to 1140 or 1130. If we can just get a slight break of that low, then we'll definitely start pushing down based off of some of the liquidity that's just available in those areas. I could see it. All right, so let's look to see this market start getting some sell side potential. Obviously we need to, if this is our high, then we'll definitely come to 1060. So maybe we can start putting ourselves in a situation where we're starting to take some of the sell side moves down, maybe past, the high 11. So 1180s, we can start sizing into a sell side move, really putting on something maybe in those 11 mids. Okay. But that's the euro. That's the euro. I would love to see this euro. I know it sounds crazy being in the U.S., but hey, I could move, right? I mean, we can go anywhere we want. I would love to see this euro up here in the high teens, potentially the 20s, especially if there isn't an execution. And guys, I'm scoping this out over the next 6 months, okay? We could meander around this level here in terms of this range, which is a 1,000 pip range. It's a pretty big range. But if we get some serious news out, folks, there's no reason why we can't finally break this high here. That has been just impossible to rip. I mean, look at all the price action that has just failed and failed and failed to break past that level. It's amazing. All right, so that's the projection on the euro. Interim in the interim, short term, we could have a sell side move. Long term, and if things keep adding up the way they are, we could see this thing up here in the high teens and into the 20s. So for this Aussie dollar, let's pull back out and over to the Aussie dollar. Aussie dollar, same thing. Same thing. We had a huge run to the sell side here, buy side U.S. strength, and then same instance. We've had this really hard level for markets to break up into. Now, I scored a pretty nice sizable move last week on this euro, on this Aussie dollar. Pushed really right around $3,500 on this buy side push up into structure. Okay, and at the moment we're kind of sitting around there. So this was the level that I wanted to take the market up into. I'll put some charts up of the analysis. And at the moment, it seems as if we're about to break the high and run up here into the 80s. All right. And so if we get to the 80s, that's where I would want to see this market maybe start to turn around a bit. Go over to the weekly. what we drew up, just to throw out the analysis. So here's our low to high here, right? We obviously see, the fib. We sat right under a 23.6 again. And within the consolidation, what you'll notice is, you'll notice that we have been obeying a lot of the fibs levels in this area. Okay, so we run down, came to the 61.8, also past structure, ran back up into the level, held this 23.6 and, meandered around the 38.2 a bit. And then immediately we had some serious fundamentals come in. This was our election. Boom, broke us down. We get interest rate hike in December. Boom, broke us back down again, down to the 61.8. And then immediately gold surges. Okay, so I could show you that gold really pushed heavy around in this time frame. And then obviously we also had that U.S. weakness coming in because of Trump not executing very well. Immediately come all the way back up into the highs. Okay, and when it came up into this point, we were in a selling mindset. So any instance where I was getting breaks, I was trying to take some sells, maybe got stopped out a couple of times, but definitely ended up profiting off of the sell side move that came in on one of the positions. I don't know where. I know there was a little situation right here where I had a couple of my guys in. This was a Thursday. A couple of my guys in actually get on a sell side move based off of this market retracing back up into structure, and I either took the breakout or I got in at a little bit worse of a level, but ended up making some cash on it. Ended up getting a gap fill on the Macron situation. Pull in. Gap fill happened right around, where is it at? We had a gap fill, and then that gap ended up, coming down in and then filling immediately back down in the structure. So that was right here. That was one of the instances there. And then again, had another instance of just a lot of volatility. So again, if you just look at this market from the perspective of just the daily, you can see that just this choppiness is immense. You don't see this kind of stuff in the equities, or you usually don't see this kind of stuff in the equities. Equities may be a little bit, toned down just a little bit, but at the end of the day, we've reached record volatility in FX, which is just amazing. So we've run to this 75.50 level. Probably going to hit off on these 75.80s, the zone that I had drawn up, a pretty hard level to break, and then we can start making some decisions around there. But currently on this Aussie, I don't have too much, just really checking out the price action on it. This was the level that we took here. Okay, so 23.6 break, back up into structure, and then we ended up ripping back up into the 50% retracement. My targets were the 61.8. I exited a little bit early because the move happened way faster. I thought it was a little bit too parabolic. And if I would have stayed in it, I guess I would have been pretty good based off of it looking like we're about to break the high here, but I don't mind. We'll probably just have to size into something else if we get another opportunity, maybe a sell side move. But same thing on this Aussie. If U.S. strength just isn't there, if Aussie pulls itself together in terms of its economy, then again, we could see this thing push back up into the highs here, maybe even get to the 80-cent range. All right. Now, at the end of the day, Australia does want a weak currency, so that could be fighting that process. So again, we may continue just meandering around this level. I could see this thing going to the 80s, and just as plausibly, I could see this thing going to the 70s, right? So let's just kind of wait for the price action to add up and the fundamentals to add up, and then we'll definitely be playing it as the year goes along. So for the pound is very interesting, right? We have Brexit, then we have Article 50, and then we have the Jolt election. Again, 23 break pop to the 38.2. Very pretty trade that we forecasted. Okay, so now we just we were hanging around up in that level for a solid month. So you'll notice here we have an entire month where we just sat up there in that level. And just recently, literally within the past couple of days, we've made this entire move here within this month. All right, so I'm going to show you, pull over into the weekly and show you there that, again, we popped out, Jolt election news came out, no real fundamentals to push us anywhere. And then immediately, once it came out that Theresa May is kind of doing horrible in terms of pulling things together for herself, in terms of, getting some kind of conservative party together, you can see that there's just a lot of weakness leaving into the pound dollar. Okay, you're getting a lot more strength coming into this U.S. dollar, but it's just, again, only based off of the pair here. So we've already ran down to the structural low. At this point, it's really just about what executes. There's so much going on. These are the most two talked about pair currencies, economies, of the year, I would say, right next to the euro. But at the end of the day, there's a lot of fundamentals coming out about these two. Hard to forecast it, but if you can get it right, I think you could catch a really sizable move. Could we come back down into this range here? Absolutely. Is this a rest onto structure here in the 26s, mid 26s? It absolutely could be, because as we know, this pound is definitely undervalued relative to what its output is in terms of its economy. So, we could definitely see this thing potentially start resting around this 38.2, and maybe this is a pullback for us to start maybe taking some buys back up in. I know I like that on the daily, because again, it gives me an opportunity to buy, undervalued assets. Me assuming that, if this is our low, maybe I can start getting some price action breaks up here in the teens, the 2017s. And then if we start getting rips right there at the 2017s, we could easily start taking this thing back up into these structural levels, and then it could rip out the high, right? But at the end of the day, this range, who knows? Who knows? Let's see what happens if the election, if the UK election just goes dismal, horrible, awful, then yeah, we could definitely end up back in this range. But again, if the tone is still the same in terms of the U.S. and this gets wrapped up, then again, folks, we're going to liquidate all those U.S. assets, go into different commodities, go into different assets worldwide, and we can start to see this thing back up into the 30s, 35s, who knows, all right? So those are our three. Some of the other stuff that we were looking at, we called out a Euro CAD this weekend actually, and it just absolutely melted. You can see what we got drawn up here. Two targets. Target 1 was this level here, which was a touch of the trend line. Target 2 was also a touch of the trend line, which was also a 23 break, which was also some pretty solid structure. So in terms of analysis, man, this thing had everything you wanted. You get a CTL break, you get your targets, which was also a 61.8% retracement level. So you had some kind of risk adversity right there at those levels, right? So again, 61.8, 50% retracement level. You can start mitigating losses. As you can see, markets did respond at that level. But then again, boom, man, we just crashed and just flew down to those lows there. So we do have a couple of guys in on that move as well. And so long term, again, if we just kind of maybe having things add up on this in terms of this euro level, in terms of this euro trade, then we could definitely crack this high, right? And so kind of maybe start milking back down in the structure. I definitely see that we potentially have some inefficient markets in here in this area. And so again, to catch a solid 300 points on a sell side move may not be so bad. So I'll keep an eye out on that for sure. Your USD JPY has been on everyone's radar just because, again, it's the JPY. Everyone's playing the JPY. I just don't play the JPY that much, but we've had, and obviously, immense price action. I mean, look at this kind of price action, man. It's absolutely ridiculous. But as you can see in 2017, we really haven't had much. All right, you've had some volatility to the upside. You had a little bit of a wick down to the sell side. This is a monthly. We pull over into the weekly, and again, we're really just kind of chopping around a bit. So we'd have to wait and see how price action reacts. But some of the levels that we were looking at were the $6s. I mean, the 106 flats. Okay. So that's something that I wouldn't mind playing the market around. It's a 61.8. We're already sitting right here at this 38.2. If we don't get the strength, and if price action keeps doing what it does in terms of this kind of sell side move, it just really looks like the markets are just going to keep melting down to that 61.8. Definitely, obviously, we'll come back on this 50, and then again we can start deciding on what we want to do. But this isn't really my pair. I've had a hard time analyzing this USD JPY. So comfortable with our top three. Was very comfortable with this Euro CAD. I love the fundamentals a little bit more, kind of gauge exactly where we can go with that one. But really precise, really really confident in terms of my analysis on this euro. We could easily see this thing up here in the 20s. Same thing with this Aussie dollar. This thing could easily start popping highs as well. If Aussie does what it wants to do, we actually might get some strength on this Aussie. But if the US dollar just really does some crazy shit, then we'll definitely pop up into the high 70s again. And pound, same thing, right? If pound does what it wants to do, then it should push higher. If US dollar does what it's doing, then it should push higher. So we do got two good signs of some upside movement on this pound, right? So other than that, folks, man, let's see what we get. If you've watched it if you watched the breakdown up into this point, do got a little special ending just because I had some extra footage so you guys can check out. Other than that, your profit is always my motive, folks. Let's see what we get. I'll talk to you guys real soon. And at the end of the day, we do have Trump in the White House. I'm not going to say that's unfortunate because as a business owner, I think that's going to actually help me out tax incentive wise. But economically, I don't know. I'm tied. I doubt he's going to be able to get done what he wants to get done, and I think that's going to have a huge effect on the economy because you have the Trump trade in full effect. All right, you have the financials, companies like Goldman Sachs up 50% in the past 2 months. Okay, and that's all speculation. if Trump doesn't get done what he wants to get done, then at the end of the day, you're going to see the devaluing of a lot of companies and our currency over the next couple of weeks and over the next couple of quarters. So it's very interesting. Everyone's assuming that he's going to be good for the economy, and they're pricing in a strong U.S. dollar. But the U.S. dollar has yet, besides that one rate hike, has yet to really show what it's going to do in 2017. Okay, it could be all fugazi. Charts. I'm going to give you guys some forecasts for this week out. Might give you guys a little further out, just to kind of, maybe I'll have this look back on and show people what I said, you know, and saying where I think that the euro, the US dollar, the Aussie, and the GBP can go in the first 6 months. But